Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us from the warm climes of Portland, Gerard Cassidy, head of U.S. Bank Equity Strategy at RBC, definitive on the American banking industry. Gerard, in my opinion, J.P. Morgan and others, but particularly J.P. Morgan, are softballing their excellence on a ratio basis. The 10, the 15, the 20 ratios you look at as a pro. Have you ever seen this before from a financial institution?
Tom, you're right. The numbers are incredibly strong. One of the ratios you refer to is their capital ratio, known as the CET1, Common Equity Tier 1 ratio, and it's over 15%. And that's very strong. And you go back to the days when we looked at the banks in the 1980s and early 90s, and the capital levels were nowhere near those levels. And second, not only are the capital levels so strong, Tom, the ROTCE, return on tangible common equity, is extraordinarily high, and they're doing a very good job.
Gerard Cassidy, when I knew you at Tucker Anthony and R.L. Day, that was back when Wheat First was rocking. Yeah, exactly. I used to read Paul Sweeney folks at Wheat First, but at Tucker Anthony and R.L. Day, Gerard Cassidy used to quill in a pot of ink. That's not the way it is now, Gerard Cassidy. Does J.P. Morgan lead on technology investment?
They sure do, Tom, as do many of the other large banks. The banking industry as a whole is obviously investing billions, hundreds of billions of dollars, actually, into technology. AI, of course, is the big buzzword, but it's the digital technology. When you think back, Tom, when Apple introduced the iPhone around 2008, and you think how you would do your banking services, and how in as little of 15, 16 years, how that has changed dramatically. And JP Morgan, Bank of America, Wells Fargo are all leading the way with digital technology, both for the commercial customer and the consumer customer.
Gerard, I heard some comments this morning from Mr. Diamond, and we'll also hear from Brian Moynihan at Bank of America about what they feel like are some overly onerous, restrictions placed upon them, after the great financial crisis. But despite that, they continue to put up just massive numbers here. Is there an argument to be made that the banks are okay here? You don't have to worry about them being overregulated?
I think one of the challenges that the big banks are seeing when it comes to regulation is that they're now competing more than ever with the so-called shadow banking industry, particularly private credit and private equity. And I think that's where the biggest banks feel that they're more constrained because of being a bank-regulated company and having to adhere to these regulations, capital requirements, liquidity requirements that Apollo, Blackstone, and others don't have to adhere to. That's, I think, their biggest focus right now.
Gerard,
just to try to get better.
You're killing me. I'm trying to get an October lobster roll here out of Cassidy. Come on, Jane Frazier's out front on this. She's doing a deal with Apollo. The big banks are going to co-opt the excellence of private equity, private credit. Is that what you would tell J.P. Morgan? Just do a deal and co-opt the industry?
They certainly can consider that strategy as well. They certainly have lowered their exposure compared to where they were in this, leveraged lending area, let's say, compared to 2006, as is the industry. Because, as you know, Tom, they go through the stress test every year, and that's where the regulators really keep these banks in check. And the industry, including JP Morgan, have been de-risked, which makes it even a stronger industry as we go forward.
So how about Wells Fargo today? When I think about Wells Fargo, I think about corporate banking, lending to companies across the country, mortgage business, consumer. What'd you see out of Wells Fargo today?
Wells put up very good numbers. One of the areas of concern for Wells recently has been their commercial real estate office portfolio. There was some meaningful deterioration in that portfolio in the past 12 to 18 months, reflecting the weakness in that market, but it's stabilizing. Their credit picture remains very resilient and strong, and they have the asset cap. You might recall they have a cease and desist order from the Federal Reserve that was put in place in February of 2018, and on top of the cease and desist order, they have this asset cap they're trying to have lifted. There seems to be strong indications it could be lifted sometime in 2025.
One of my high points of the week, Gerard Cassidy, was a good conversation with Thomas Show, of course, at Keefe Bruyette and Stifel, and we were talking about the roll-ups of the industry. Give me a bank where they're not worried about going to lunch forever. Give me a smaller bank, Gerard Cassidy, that's in the business of doing the right thing for their shareholders.
Tom, there are many of them, and some of them aren't so small. When you look at some of the bigger regional names like a Fifth Third or Regions RF, but moving down into the smaller names, look at a Wintrust out of Chicago doing a very good job of serving their customers in the Chicago market, or Provident Bankshares out of New Jersey. These are companies that are smaller regional banks doing a very good job, and I think you're going to continue to see the smaller regional banks perform well as long as the economy stays in a soft landing, which we're currently in.
Love it. Gerard Cassidy, thank you so much with RBC Capital Markets.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
The path from Buffalo to Simon School, University of Rochester, to an incredibly sterling career in fixed income. Leslie Falconio joins us right now. Leslie, I'm just going to cut with UBS, I should say. Leslie, I'm going to cut to the chase. My head's spinning forward. Are you clipping a coupon, or can you really convince me you can generate total return in fixed income?
Most of that total return is going to be by clipping that coupon. It's going to be from carry and yield, right? Our expectation is that 10-year where we are right now, around that 409, next year it's going to be around 380 to 410. Spreads are so incredibly tight given the fact that we're pricing in that soft landing everywhere, or even no landing. So it's really going to be to your point about the carry.
So mere mortals calling up UBS with a pot of money, do they say, do we ladder or do we barbell given the demand of coupon?
I think first out, it all depends on your risk, but actually, we're preferring more right now a bit of that barbell. But, it does. It depends on your risk. I mean, I think that what we're going to see now is a steepening of the yield curve. We still think the yield curve is going to steepen heading into 2025. We still think the Fed cuts twice this year, once every quarter next year, terminal about, 325, 330-ish, which is really where we are right now. So the risk is that those people go over their skis and really take on that lower credit quality that we're seeing right now, and we're not watching their correlations to the equity market, and realize if that hard landing does occur, if there is a tail risk, which we're not necessarily calling for, but you need to be mindful of risk assets are tight across the board.
Yep. For those of our audience in front of a Bloomberg terminal, I&Go is the function, and it gives you the Bloomberg Index browser. The best performance in the high yield, in the fixed income space is U.S. corporate high yield, up 7.44%. How did that happen? I thought people were concerned about recessions and things like that.
I think it's twofold. One is that when you look at what's had the biggest rally, if you will, where it's positioned on the curve, the high yield index is about a 3-year, right? So you have that short end that's coming down. Two, at some point in time this year, you had a 7.88%. If you locked that in and clipped it and rolled it, you're doing really well. And secondly, the high yield sector, as we said, is around 290. So you're looking at spreads that we haven't seen since 2007. So the question really becomes, what now? Yeah.
For the kids listening worldwide, I got a lovely note from a student in Switzerland the other day. And for all of you younger, I really want to point out, and Paul knows this, Leslie Falconio, her cadence in her pace is how bond adults talk. They don't talk like general counsel sanitized strategy stuff. They talk in this Cliff Bond way that you learn at Soros, you learn at Oppenheimer, and when you're holding court at UBS, Paul. I mean, this is how adults talk in the business.
I'm trying to learn here. High quality. What's quality mean to you?
That's a great question. I mean, I think that we look at the quality. When people say this, I always find it very interesting. To us, it's investment grade. Sort of like that triple B and above that we think is quality. Now, there's tiering within quality. That's just it. Not every quality is government guaranteed. Okay. So there's tiering within that quality. But when we think about things, sectors that we have a low probability of being downgraded, or more importantly, what you're concerned about in fixed income with your cash flows are defaults, right? Not being downgraded, not spread widening. It's the defaults that you worry about. That impacts your cash flows. So for us, we think about high quality as like that triple B and above.
So I guess in the month of September, John Tucker was reporting that it was, in terms of investment grade, like a record month for new issuance. If I'm Morgan Stanley trying to push some bonds out, do I call you? Are you at the top of my call list? Are you buying this stuff?
We've had the technical tailwind to investment grade corporate has been really large. That's why all the supply has been absorbed. Insurance companies, pension funds, foreign buyers, and retail as well. Ultra high net worth are still buying this. Again, they could lock in fixed income, get a good carry, compound that income and their total return for a asset class that will give you your principal back at par is pretty attractive.
Yeah.
I think this is completely unknown. And folks, the Bloomberg indexes from Lehman and Barclays over the years, I'm sure Tom Secunda picked this up. These are the definitive price index.
Yep.
Leslie Falconio, I don't think anyone in the known world understands there's a bull market in corporate bonds. Off of October of 2022, that index is up 17, make it 18%, basically 9% per year in bonds. You're in a bull market like NVIDIA, right?
Absolutely. We absolutely are.
Am I right that people don't know this, that the bond market's in a legit bull market?
Oh, there's no question. I mean, let's be honest. Most people focus on the equity market.
Yep.
And the fixed income market, the bond market, sort of the hedge or the other.
Yeah.
That's right.
Now, I got to get this in. I mean, this is really important. I don't know if you can come back. If you were out of Jenny Cream Ale at Rochester, did you go to Utica Club or did you go to Jenny Beer? Come on, be honest.
Well, I'm not a beer drinker, so I'm probably not the best person to answer that. But I'm not sure. I'll leave it. What do you think? I'll leave it up to your opinion.
Cream ale.
There we go.
Starve. You don't drink the others. You wait to get more cream ale or more 12 or sale. Leslie Falconio. She's the only one that went to Lake Placid and said, "Oh, this is warmer than Western New York." Leslie Falconio, thank you so much from Buffalo, from the University of Rochester.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, "Alexa, play Bloomberg 1130.
We lean on Jennifer Lee, senior economist, BMO Capital Markets. Last time she was on, she was lights out as well. Which is more important, Jennifer Lee, CPI or PPI?
Good morning, and thank you very much for having me on. I don't know if you should be leaning on me for everything, but I think I'm going to say the CPI is more important. Whatever happens with the PPI doesn't always filter into the consumer price index, so we're always just looking more closely on the CPI and, of course, the core PCE deflator. Right now, I mean, it looks like, we got a little bit ahead of ourselves, perhaps, with a slightly hotter than expected number that we saw yesterday for CPI. And it sort of balanced it out with today's PPI report, at least the headlines that I can see so far. But it shows that. Sorry, keep going.
No, I just do the market. I know. I want to do the market because it's moving. It's moving in a Brian Belsky way. We are -5, and we're now +4 on futures.
Jen, how do you think our Federal Reserve is going to take in some of this inflation data that we've had over the past couple of days?
I think they're going to take it with a grain of salt. I'll tell you this much. I was sort of prepared for potentially a hotter than expected PPI. And even if it was, and again, with a slightly stronger than expected CPI number, I think the Fed is going to take this with a grain of salt because it's going to take a lot, I think, to get them to change the path that they're on. Do you remember how it took it took like 5 CPI reports in a row to allow Fed Chair Powell to be comfortable and confident to start cutting rates. So it's going to take more than one slightly hotter than expected inflation report to get him to get off that path. It's going to have to be, the bar is quite high for him to not cut, or at least take a pass in November. So we continue to see the Fed continue to cut at a 25 basis point cadence over the next few meetings. I think 50 basis points. This for sure will sort of throw that one.
Do you feel like inflation's been whipped here, Jennifer, or do we have to keep an eye on it?
You're on the edge of Gerald Ford.
I am, exactly.
My word.
Me too. Okay, so I don't know if this is a popular view, but I'm a little bit more cautious on the inflation front, and I point to a number of factors. Longer term. I mean, we do believe that inflation is coming down towards that 2% target, thanks to all those rate hikes that we've seen over the past couple of years. But, as my esteemed colleague Ryan Belsky would say, nothing goes down in a straight line, or nothing moves in a straight line. And I think it's going to be a little bit of a choppy move down, because we're still going to potentially see some inflationary pressures, coming from all these tariffs that we've already seen so far. And there's going to be probably more to come. All the longer term impact from climate change, all the wacky weather, the extreme weather that we've been seeing has been really putting pressure on food prices. The labor market, the last jobs report was quite solid, which is interesting. I don't know whether or not that's going to be revised, so that'll be only time will tell. But demographically, we're still seeing like in terms of working age population is declining, fertility rates are down, so we're going to still see tight labor markets, and of course all the strikes and the impact it could have on wages. So it's a long list. So I'm still a bit worried. I guess I'm still a bit worried on the inflation side.
You're riding into the weekend, Jennifer Lee, and here, mid-October. I know it's too early, but I want you to frame out Q4 and into Q1 of 2025. The fact is, everybody's gotten wrong real GDP and nominal GDP buoyancy so far this year. Does that continue where we get wrong the growthiness of America?
So we have been cautiously optimistic. We have always been calling for that soft landing. So I don't think we've ever called for a hard recession, and we've been correct so far. But of course, it takes time for things to filter through the economy. And again, over 500 basis points of rate hikes is doing this job right now. So we're seeing the economy slow moderately. We're seeing inflation slow moderately, and it's not going to come crashing down very quickly, but it is coming down. So I think, right now we've seen that gentle breaking of the economic growth so far as we're heading into the fourth quarter, and we'll probably continue to see more of that. But there's still a lot of uncertainty out there, given the things that I just rambled off earlier, and of course, whatever happens after the election and what policies the winning party will be introducing to the table, and that's going to start. We won't have a good idea of that until January.
When you see inflation numbers like we have over the past couple of years and labor numbers like we've seen here, how does that inform kind of your view, Jennifer, of kind of the U.S. consumer these days?
So we always say, never to underestimate the U.S. consumer, and I still believe in that. We may see some month-to-month weaknesses overall, but the U.S. consumer is still in good shape. They've got an over 5% savings rate, for example. You know that the jobs data so far have been still resilient as well. The jobless rate of just over 4%, off the lows, of course, but it's still historically low. And I think that is good news. Wages, we've been averaging about 0.4% average monthly wage growth over the past year, which is still a decent number. So as long as wage growth is strong, is decent, we're still seeing job growth, and there's money coming into one's bank account. I think that leaves the consumer in a good position. They don't have to spend everything right away, but at least they have something for a rainy day that they could spend later.
How do you aggregate your numbers given the polarity of society in America? How do you come to a summed conclusion, given certainly what we see with our politics, the mass polarity, the barbell of America?
It's difficult, but we have to look at things in the aggregate. And again, broadly speaking, we still have strong or resilient U.S. growth, just over 3% in the second quarter. We actually upped our growth forecast just a little bit for this year to just over 2.5%, which is good. I mean, again, after everything that the U.S. economy has gone through, and then we're still raising it, which is good news. And a number of shops I think have been taking away their recession forecast as well. So far, touch wood, it looks like we're in pretty decent shape, but we're going to have to see, because a lot of things could happen. There's still a lot of risk out there.
Jennifer, one final question. Thank God the Vikings have a bye week. Has Belsky beaten you over the head talking about Minnesota Vikings? You just stand up and walk out of the room when he gets going?
I will, or I'll just nod. Or I'll roll when he does that.
Brian, it's finally good to see that Minnesota's finally winning. Jennifer Lee, thank you so much. Really valuable. She'll publish this weekend. Look to BMO Capital Markets.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Getting it done as well into the weekend. Joseph Mathieu joins us right now. Balance of power. My head's spinning. Joe Mathieu's head spinning. Kaylee Lines knows exactly what's going on. Joe Mathieu, what do the two candidates need to do to get to Monday?
To get to Monday, what a question. It's interesting because Donald Trump's going through Aurora, Colorado to get to Monday. Kamala Harris has a very different path. She's coming off this Univision town hall last night, and it's pretty stark when you look at the contrast between these two candidates. Donald Trump today wants to talk about Venezuelan gangs taking over a town that most Americans have not heard of. Kamala Harris is going to be getting briefed by FEMA today and talking about damage estimates and hurricane disaster recovery. The fact is, both seem to be working. This is a tied race, Tom. It's a 1-point race in every state that counts, maybe not Minnesota. And so all the experts are scratching their heads wondering how to answer that question.
Well, you mentioned, Joe, that Kamala Harris said at town hall with Univision last night. So I guess it begs a question, how crucial is the Latino vote and how's it breaking?
Well, very. And look, the narrative going into Kamala Harris arriving at the top of the ticket was Donald Trump has taken these votes away from Democrats, young black males, young Latino males specifically. And it's not lost on us that Barack Obama started his series of events for Kamala Harris last evening in Pittsburgh by speaking directly to young black men, suggesting they might have a problem voting for a woman. But look, that was a really different town hall than one that you would see from Donald Trump. It was very emotional. People were crying. They're talking about health care bills. They're talking about lifestyle stuff, where Donald Trump was speaking to the Detroit Economic Club yesterday, a 2-hour stem winder in which he relitigated the 2020 election. And about an hour and a half in, he did drop a new idea. Guys, we're less than a month away from the election, and we're still hearing new policy proposals, in this case, a tax deduction for your car insurance payments. Paul, that might save you a little bit of money.
That might save me a little bit of money. It just feels like both candidates are just throwing things out there that they feel are polling well. And, what do you take? How about President Biden here? What role do we expect him and maybe his administration to play over the coming weeks here as we get to November 5th?
It's interesting. He seems to be unleashed a bit by not being at the top of the ticket. His favorability ratings are up about 5 to 10 points, depending on the metric you're looking at. It's a pretty significant move since he left the race. And it was remarkable to see the president of the United States fact-checking Donald Trump from a presidential podium in the Roosevelt Room the other night when it comes to the misinformation around the storm. He's got the opportunity now to just go after Donald Trump all he wants and let Kamala Harris speak to more lofty ideas, although she's done some of that herself. Yeah. It's just an interesting role that he's carving out for himself at the moment, not being in the race anymore.
Joe, you're qualified more than anybody I know to answer this. This came up a couple days ago on the old Republicans, including Mitt Romney. Now, I would have said Mitt Romney was 59, maybe 66. Governor Romney's 77. Okay, so like the old guard's getting older. I don't know if you knew that, Joe. But my answer is, after Trump, where are the Mitt Romneys of the Republican Party? Do you have any clue on that question?
The Mitt Romneys are retiring, even the young ones. Look at the Mike Gallaghers of the world who said, this is clearly not my place here in Washington. Everyone in the Republican Party wants to answer your question, Tom, by pointing to J.D. Vance. And he is not Ronald Reagan's Republican here, but they see that as the future of a populist Republican Party. Tom, the question is, does MAGA go back home after Donald Trump leaves the picture, whether he serves another term or not?
Joe, the heart of the matter is, in Belmont, Massachusetts, there's one or two, there's like 5 Republicans, I think, left. Joe Mathieu, are we talking about the great unspoken here, which is finally a third party in America?
Well, gosh, would you call it the Trump party? I don't know. Maybe establishment Republicans want to make their own. I don't know that they're going to have a lot of luck with that. He could get together with Bill Weld. Maybe they could go out to dinner in Belmont. But look, you're pointing to something that's important. When we talk to Republicans here on the air, they're not always reflecting the view of MAGA. When you go to CPAC, they're not always reflecting the view of Republicans. So maybe we do have 3 parties right now.
I mean, one day I was at Lockover's under that portrait my grandmother wouldn't let me look at. There's Bill Weld dining with Mitt Romney. It's gone. It's just absolutely. It's like the Red Sox. They're gone.
I don't know where that party went to.
Along with the 6 coaches, Tom, where are they going?
Joe, what happens? The evening of the election, the day after that, what are we going to know? What aren't we going to know? How long could this go on? Do you think? What's the thinking in D.C.?
Well, look, it took till Saturday last time. The conventional wisdom is if this is a Trump win, they call it that night. If this is a Kamala Harris win, I'll meet you on Saturday when we're still going to be finishing counting the votes here. Look, Pennsylvania doesn't even start counting the mail-in ballots until that morning. You're going to come into work with Tom on Wednesday. Kaylee and I are still going to be there wondering how the hell this thing is going to end. And we're going to spend all week probably talking about it. Unless this breaks one way or the other. We've got 3.5 weeks for something big to happen. Where's the October surprise, guys?
I was supposed to be down in Jamaica, east of Montego Bay.
Yeah.
And they said, no, you got to do the Joe Mathieu schedule. I had to clear my schedule from November 2nd to like November 10th.
No Jamaica, man.
On the edge of Joe Mathieu. Because, folks,
so when are we allowed to go to Negril?
Yep.
Is that like Thanksgiving now?
Thanksgiving now, yeah. Maybe. We'll have to see on it. Joe Mathieu leading our coverage here, Balance of Power with Kaylee Lyons. And, of course, 12 noon. They do it again at 5 p.m.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.